How can you invest in the stock market and build a early retirement portfolio without having to learn a lot about the fundamentals of investing or having to worry about stock picking? Well, good news for you. There's an easy way to go about it, and that's through index fund investing. In this video, we're going to be talking exactly about that and sharing with you specific examples of how you can start from zero and get all the way to $1 million portfolio through persistence and time commitment. We'll also share how investing in the S&P 500 is one of the best ways of getting there. And in fact, the legendary investor Warren Buffett also attests to that. Let's get into it. A quick look into a compound interest calculator shows us how if you start investing even with $0 in the beginning and just by putting aside $500 every month and getting a return of 10%, which we're going to be talking about how you can get that through an index fund, over the span of the 30-year time frame, you can easily reach that $1 million in total investment amount. And what's so fascinating about that is that majority of it is thanks to the power of compound interest, whereby close to $850,000 of your total money is based on the interest that has been compounded and grown over that 30-year time frame. Now, you might be asking, is it possible to actually get that 10% return in the stock market? The answer is yes, particularly if you look at it from a longer time horizon, such as the 30-year time horizon that we were looking at the previous example. Investing in S&P 500 index ETFs, and there are so many variations of that out there, such as VFV, would allow you to get that 10% annualized return over the long enough time horizon. For example, if you look at the annualized return for VFV, just as an example, it's showing an annualized return of 16% plus since its inception back in 2012. Or if you look at the Vanguard S&P 500 ETF VOO, which is in US dollars, similar type of returns. Since its inception, you're getting 14% plus annual return. And the inception date here goes back to 2010. Now, at the onset of the video, I talked about how Warren Buffett, the legendary investor, is also an advocate for S&P 500. In an article, an interview with him a couple of years ago, he was quoted how he were reflecting on the ability to be able to really take advantage of investing in S&P 500 to grow that into a much larger investment. So he asked the anchor in that interview, let me give you a figure that blow your mind. I bought my first stock when I was 11 years old, said Buffett. It was the first quarter of 1942, shortly after Pearl Harbor. Buffett recalls that. And he said he spent about 114 US dollars at the time to buy a stock. Now, he asked the anchor if he had put that $114 into the S&P 500 at the time and reinvested the dividends. He asked the anchor how much he thinks that would have been worth today without adding even a penny ever since after, just keeping that $114 invested and letting the dividends to be reinvested. The shocking number since 1942 to the date that, of course, that interview was happening around 2019, that amount would have turned into a massive whopping $400,000. Now, of course, over the span of the lifetime, that would have been many, many years. Nonetheless, keep in mind that that was just putting the money in there and not doing anything with it, not even having to worry about it or adding any penny beyond that initial investment. That just goes to show the power of investing in S&P 500. Buffett has, in fact, long recommended investors to invest their money by putting it into S&P 500 index fund, which has offered many investors perfect opportunity for retirement planning and saving for their early retirements. Now, on our channel, we've previously talked about some of the best S&P 500 ETFs for investors, particularly in Canada. We talked about ZSP, VFV, VSP, and XSP. For investors outside of Canada that are interested in investing in S&P 500 in US dollars, you could consider options like iShares Core S&P 500 ETF with ticker symbol IVV, which is offered through BlackRock, or the popular option with Vanguard is VOO, Vanguard S&P 500 ETF. All of them allows investors an option to invest in the S&P 500 at very low costs. But today we want to do a deep dive in Vanguard S&P 500 Index ETF offered in Canadian dollars, VFV, and do a more robust review of that. As you notice here, the last trading price for VFV was at $93.92 in Canadian dollars, and it has a very low management expense ratio of 0.09%. That equates to about $9 per $10,000 invested. It does pay its distribution dividends on a quarterly basis and currently has a 12-month yield of 1.30%. In terms of assets under management, AUM, you're looking at $6.5 billion and the opportunity to get exposure to the 500 of largest US companies through VFV. Some of the highlights of this fund is seeking to track the performance of the S&P 500 index to the extent possible, investing primarily in the US Vanguard S&P 500 ETF, employing a passively managed full replicated index strategy to provide exposure to large US companies, and using efficient, cost-effective index management techniques. The fund was incepted back in November of 2012, and the distribution per unit is currently sitting at 28 cents per share. Looking at the past performance of VFV, here the performance showed by graphs, and we're going to take a closer look at it actually based on this table, which might make it easier to take a quick look at it. Different time horizons are shown. Let's take a look at the return by the market price of the fund. VFV by market price, months to months end, this is by the end of July, it was showing up by close to 9%. Year to date, though, by the end of July, this fund was down by about 11.6%. 1 year return was showing to be down by 2.36%. Now, here's where things get interesting. As you look at longer term horizon, and this is truly very important for investors with a longer term horizon, and if you're investing, let's say, for planning for retirement, this is something that you have to be more concerned about. You shouldn't be worried about any short-term returns because the market is going to go up and down. That's the nature of it, and that's a healthy sign of a market. What you want to make sure you see is long-term returns for the market. That's when you're investing with a longer-term horizon. We're talking about 10, 15 to 30 years time horizon. In the 3-year annual return, it's showing a positive 11.8%. This is interesting because this already takes into account the returns that we've had in the past year and year to date. Despite that, you're still seeing over the longer term horizon, you're still seeing that 11% plus annualized. 5-year annualized return is a nice 13% plus return. And the annualized return since inception, which goes back to November of 2012, annualized, we are seeing 16% plus return. Just remarkable, safe investment option for investors without having to worry about what they are putting their money in. This graph is also kind of interesting. It shows you how $10,000 would have grown over time. Let's say if you put $10,000 a year ago, right now, it would be around 9,700. This is by the end of July. At the lowest point, it would have probably gone as low as around, you're looking here, 9,000. Obviously, it's not exciting to see, but it is a healthy mark. And for investors who dollar cost average and continue to put money in the stock market, they would take advantage of those dips in the market as the money continue to grow back up. And during the recovery times, they would get that exponential returns. Look at it over the 3-year time horizon. Despite ups and downs, your money would have now been worth 14,000 in 3 years. And in 5 years, that's when it gets so exciting. If you put in $10,000 5 years ago, right now, your money would have grown to $18,000. Just remarkable, almost doubling your amount of money more or less within that time frame. And if you look at it since inception, let's say back in 2012, by now your money would have grown to close to 43,000, almost four times. You have quadrupled your money in the span of about 10 years or so. Now, if we look closer at the specifics within this fund, we're looking at in total of 503 holdings beneath that, mainly the 500 large company in S&P 500. We're looking at the percentage of return on equity, which is at 21.7, price to book ratio of 3.5 multiple. Well, these are interesting figures for us to know. It's not going to be really a deal breaker or something for us to really be concerned about, especially with S&P 500 Index ETF. You're going for a passive investment. You don't really need to worry too much about the characteristics of these funds, knowing that you're betting on the future of the U.S. economy in this instance, given that your full exposure is to U.S. stocks. In terms of the size of the businesses as part of the S&P 500 Index ETF VFV, about 76% of them are large size businesses, about 15% of them are medium sized businesses, and a very small fraction of these funds are actually small size businesses. All of your exposure is to the US, as we talked about. Now, we're going to take a look at the sector breakdown exposure. Majority of it is to information technology with 26.8%. Following that, we have healthcare with 15% and financials by about 10.8%. The rest of the sectors are showcased here, including consumer discretionary, communication services, industrials, consumer staples, energy, utilities, real estate, materials, and all in all, they account for about that 100% of total breakdown of this stock and ETF. We have made a video on our channel talking about the 11 different stock market sectors. We provide specific examples of dividend stocks for each one of them. If you haven't checked out that video, be sure to check it out and let us know what you think. Next, we're going to take a look at the holdings, top holdings within VFV. The biggest exposure by holding percentage is to Apple's. We have a market value of 6.5%. Following that, we have Microsoft, Amazon, Alphabet Class A, Alphabet or Google Class C, Tesla, Berkshire Hathaway, which is the business of Warren Buffett, United Health Group, Johnson & Johnson, and NVIDIA. These are our top 10 holdings for VFV. Lastly, if you look at the 52-week price range, the highest that this stock ETF has hit was $109.11, and the lowest it was $84.28. So right now, the price of $93 or so is hovering a lot closer to its 52-week low price. Lastly, if you look at the distribution history for this fund, you can see the last time, as we talked about, it's being paid on a quarterly basis. So for example, the last payment date goes back to July 8th for the amount of 28 cents per share. And you can see how these amounts has changed over different time horizons. It's broken up by income, capital gains, and so on and so forth. So all the details are provided here for dividend investors. You also take a look at the annual distributions. For 2021, it was at $1.14. The year prior to that, it was $1.13. Prior to that, $1.15, hovering around that over the span of the past years, but definitely grown since then. Like 2013, they were looking at only about 50 cents in terms of total distributions per share. But since then, as the value, the price of the ETF has grown, so has their distributions. They've maintained at about 1% return of distributions annually there. As you notice, we did take a specific look in one of the Vanguard S&P 500 ETFs. This was VFV, mainly for Canadian investors, but we also talked about VOO or IVV for investors outside of Canada that are interested to get exposure to S&P 500 index fund investing. Hope you found this video beneficial and gained something of value from it. If you are new to investing and are just wondering how you can get started, the easiest way to do so is by opening an account through one of the popular brokerage accounts out there. There's so many of them out there, including Robinhood, eToro, Questrade, Wealthsimple, depending on which country you are and what type of brokerage account you're interested to open. But the one that we would do recommend, particularly for Canadian investors, are Questrade and Wealthsimple Trade. Particularly for Wealthsimple Trade, it does offer you the option to buy Canadian stocks or ETFs at no cost whatsoever. For example, if you were to buy VFV, you could open up a Wealthsimple Trade account and buy these shares at no fee whatsoever. And in fact, for some of these funds, they even offer you the option to buy fractional shares. That's something that you might want to check out. We do have a referral link in the description of the video. If that's something that interests you, by using the referral link, you would be awarded either free stocks or some cash bonus value, depending on the offer that Wealthsimple Trade has at the time. So I do encourage you to check it out. It's a win-win way for you to get started with some sort of perks and also support us on this channel. If you enjoyed this video and gained something of a lot of value from it, please do give this video a thumbs up and share it with someone else who might find this video beneficial. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks. We also talk about investing passively through ETF investing and ways to reach financial freedom. With that, thank you so much for watching this video until the end. And I hope to see you next time.